Apple's Irish tax strategy explained vertical bracket Fox Business. Skip to main content, Latino/SBC/Fox Business, home/Swedish/interactive, Fox News/SBC/Latino/Fox Business. Skip to main content, Fox News/Fox Business, article page. Fox News/SBC/Latino/Fox Business. Fox News Digital Network. Fox News. Fox Business. You report Fox News Radio. Fox News Latino. Fox Nation. Fox News Insider. Login. Account. You're logged in as. Profile. Logout. Search site. Home. Video. News investing. Technology. Personal finance. Business leaders on air. Small business. APPLES Irish Tax Strategy Explained. By Elizabeth MacDonald. MX Bottom Line. Published May 21, 2013. Fox Business. Reuters. Tim Cook, Apple's chief executive, and Peter Oppenheimer, chief financial officer, are expected to testify before the U.S. Senate Permanent Subcommittee today to dispute the findings of a new Senate report in its tax strategies. A new Senate report alleges that Apple blows through a loophole that capitalizes in the difference between U.S. and Irish rules regarding tax residency to avoid paying corporate income taxes. The report says the move let Apple shift at least $74 billion away from the Internal Revenue Service between 2009 and 2012. The report also alleges that Apple uses shell operations in Ireland to avoid U.S. taxes. But Apple hotly disputes that characterization. Apple says its Irish units are not offshore operations, but instead run a huge chunk of Apple's global business, which the Senate report also indicates. Apple says its international headquarters in Cork, Ireland, employs 4,000 workers. These workers are responsible for selling Apple products to consumers and businesses in Europe, the Middle East, Africa, India, Asia and the Pacific, information that is noted, too, in the Senate report. The 4,000 workers at Apple's base in Ireland are engaged in manufacturing, customer service, sales support, supply chain and risk management operations and finance support services, Apple's testimony says. Apple says 61% of its sales come from overseas, which is why 2/3 of its $144.7 billion in cash and equivalents is parked overseas, cash which supports growth, including things like acquisitions or opening new stores. The Apple units in question are located at the same address in Cork. Apple incorporated the Apple Sales International unit in Ireland to hold Apple's offshore intellectual property rights. That unit is the recipient of a big chunk of Apple's global sales. Apple has negotiated with the Irish government just a 2% tax rate, or less, in profits from that unit, more than 10 percentage points lower than Ireland's corporate tax rate. Apple Sales International buys Apple's finished products from a manufacturer in China, resells them at a substantial markup to other Apple affiliates, and retains the resulting profits, the Senate report says. Apple also incorporated Apple Operations International in Ireland more than 3 decades ago, the parent of Apple Sales International, which is controlled by Apple executives in Cupertino, California. The units share members of their boards of directors. No bank accounts or management personnel are located in Ireland, the Senate report says. But the Senate report alleges Apple Operations International is a shell company that has no workers. AOE is a 30-year-old company that has operated since its inception without a physical presence or its own employees, the report says. However, Apple hotly disputes that characterization, saying the Senate report is incorrect. It says its 4,000 workers in Ireland perform important business functions that facilitate and enhance Apple's success in international markets. The Irish headquarters are not a shell company, Apple's testimony says, and that the offices contributed more than half of Apple's R&D costs in 2000.